Welcome to Business Lines State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Namaskar, welcome to the latest episode of State of Economy, where we are going to talk about various high-frequency economic indicators which were made public during last 4 to 5 days. And also, what is the outlook we are going to see on the front of inflation? To talk about more, we have with us Mr. Rishi Shah. Rishi, let me begin with the most important high-frequency economic indicator, that is GDP number for FY24 and of course for the fourth quarter of FY24. Everybody is
Right.
saying that it is beating the expectation. It has beaten the expectation, but there are some concerns area also. What are those concern areas?
Right, Shishir. So thanks a lot for having me on your podcast. I think to start off with, it's a good note that you've chosen in terms of the GDP data. I think it's broken it's beaten everybody's expectation, and generally the central bank and the government itself tends to be a little more cautionary with these numbers, but it's even beaten those expectations. So something, of course, is going on in the background which was not very well accounted for. Uh, the issue largely remains on the fact that your discrepancies, the data, of course, it's positive. If you look at the breakup, manufacturing has done fantastically well. Services have held up. Consumption demand is, somewhat subdued, but that's been the case for the last few years now. So what's really one area that you can point out as a matter of concern is the number that they sort of highlight as the discrepancies. So that is really, it's a volatile number. It will continue to change, but that's been quite high. Overall, but however, having said that, see, the GDP is a backward-looking indicator, and it should be seen as such. The essential point or the key takeaway from this is the fact that the economy probably was doing slightly better than what most had expected, especially if you look at the advanced estimates that were shared by the government themselves. It's an important, while slightly statistical point, that the advanced estimates are just a plain extrapolation of the trends. So they don't really add in more data. They just see how things have been moving and just sort of sketch the line onwards a few months down the line. It's actually done better than that. That shows that, the incoming data has been better than what was expected or what has been the trend. So, for me, that is a big positive. While, yes, of course, there is a slight sort of hiccup on the discrepancies front, but overall, I think the trend will remain positive, and this is a positive surprise.
So if I understand correctly, you're talking about the difference between GVA and GDP, and that is purely because of the net tax revenue is much higher and subsidy payout was less. Am I right, Rishi?
So actually slightly more nuanced than that. What's really happened is, the supply side data that you get, which is your GVA data, that is almost all of it is primary data. That is coming from different sources. While your GDP data, which calculates the gross fixed capital formation, the private sector sort of consumption demand, government demand, exports and imports, they are more in terms of derived data. Then there is some element which they're not, it's much more complicated, but that's some element which cannot be accounted for at present, because there is a lot of data which is incoming. That goes into the discrepancies part, and that is what is sort of shown up a little higher than what would have been ideal. But yeah, that's the thing. On your point, you're right. The taxes have actually done well, and that will show up in the GVA part, and the difference between the GVA and the GDP part separately. But yeah, the I'm talking about the demand versus the supply side of GDP estimate.
Okay. Rishi, one concern is about the consumption. Do you see that consumption has some ground, or it is just a temporary or transitional phenomena?
Uh, clearly, to be very honest, it's there's a lot of speculation on what's really happening on the consumption side, right? The situation on the ground, the talk about a K-shaped recovery, there is, of course, truth to a lot of what is being said, while there's the other side of the coin also, that yes, the economy has been doing better, consumption patterns are changing. And the economy is, if you look at how data has been coming out, at least for the last year and a half, there has been a very large focus on investments. So yes, there is, if you look at just independently what is being sold, uh, quality matters. The more expensive products are possibly being sold more. I was looking at the, data for car sales. And if you see that the entry level vehicle sales numbers have actually dropped, and the others are going up, that shows that there is some kind of income transition, of course, which is underway, while there may be an impact on the lowest strata also, wherein their consumption is being hit. So it's really a mixed bag, and it's difficult with the kind of data that we have, unless and until we get those large sample NSSO surveys going again, to get a better sense or a handle of the situation.
Okay. Rishi, coming to fiscal deficit, which for FY24, the revised estimate was 5.8%. Now we have 5.63, if I take the last digit
Yeah.
also. And now, if we talk about the FY25, the budget estimate is 5.1%. But with the surplus transfer from RBI, which is 2.1 lakh crore, and the profitability we are seeing of PSBs as well as the CPSEs, the
Yeah.
expectation is that the fiscal deficit in the full budget, when it will be presented in the month of July, may be lowered. What is your take on that?
Uh, it may be lower. I take that point, but in an ideal situation, and I mean, your economics would dictate that possibly it should not be lower. uh, the kind of surplus that the RBI has given, the kind of tax numbers that we are seeing, and the kind of support that is needed on the ground for people, for general upliftment of people, whether it's expenditure on health, skills, uh, basic infrastructure, soft infrastructure. I think the government should continue to spend a little more and not be that concerned about the fact that the fiscal deficit is still slightly higher. If you see their record over the last 10 years has been pretty good, barring the COVID episode, in which case, again, I think the Indian government did pretty well. But overall, they have met the targets that they have set, or actually have, come slightly under it. I don't see a larger point of projecting a 4.9% or a 4.8 or even a 5% of GDP as a fiscal deficit, because the markets are quite content with a 5.1% number. The financial markets are more interested to know how are you going to spend that money, and if that is in the right direction, and it is direction which sort of fortifies development, which pushes development. I think, yeah, the market is going to take it in their stride, and a 5.1% is of a GDP is not really a problem. It's where you spend is what the markets are really after.
Got your point, but one thing we have to keep in mind that by FY26, we have to bring down the fiscal deficit to 4.5%. So,
Yeah.
considering that glide path, there is a expectation building up that it may be lowered, and now the transfer from RBI and also dividend from various PSBs and CPSEs are going to help that. So, you rightly pointed about the capital expenditure, which is critical at this moment. Now, coming to the other side, which is the GST one. GST collection in the month of May was 1.73 lakh crore. And after a
Right.
record high of 2.1 lakh crore in month, which is a traditionally high number. In fact,
Yeah.
during last many of the years, we have seen that whenever there is a record high, that is in the month of April only. Now,
Right.
coming to the GST number, and if I take one point from your previous answer, that was about the consumption pattern, where we are going for more and more high-end consumption. We are seeing good increase in that. Does this
Yeah.
mean that the GST collection is mainly through the pricing thing or high-end consumption thing, and not consumption is distributed across the board?
See that, I think that's a very, very good question, Shishir. And I mean, we'll have to go deeper into the numbers. You're absolutely right. If we can run some analytics and figure out, because if the categories which are resulting in this increase in GST is coming from the 5% sort of grouping of products, and maybe the 5 and 12%, which will not go into your luxury category rather than the 18 or the 28%, there is a case to be made that yes, consumption on the ground is okay, while the other way around, it will it will give you another indication. I think that kind of analysis with the latest data coming in is warranted, and maybe a longer term analysis over a year or so is warranted at this, because the GST numbers will give you the exact, there is no fudging or any way a person cannot differently interpret that. That's difficult. So I think that is an exercise that needs to be taken on board, and maybe next time we speak, I will have a deeper insight into that.
Thanks, Rishi. And now coming to the PMI manufacturing number, which is a 3-month low, and it is showing some kind of slowdown in the manufacturing. Is it a routine thing, or it is usual thing, or do you see something unusual in that?
See, I personally, the PMI numbers globally are very important, and they track the GDP, overall manufacturing GDP very well. I mean, we've done this exercise in one of my past roles for the European economies, the American economy. However, that kind of correlation doesn't really hold very well for the Indian economy. At best, it gives you an indication of the kind of enthusiasm and kind of sort of momentum that is there on the manufacturing side. I won't really, I looked at the numbers today. I think it's at around 57.8 or 57.4. Small downtick from last month, wherein it was about 58. But the important point is that it is well into the expansion category, I mean, territory of 50 plus. So, I really don't think that 1 month's number is important. If you were to look at the longer term trend on how this number has been going over the last 6 months, 12 months, 3 months, it has been in an upward direction. Despite its, sort of the trough that it hits or the peak that it hits, it's still been on the up move. So I think I'm pretty positive. I think the manufacturing activity is somewhat moving up. And overall, it's just a positive number to look at. I won't really read too much into that.
Okay, so the correct number is 57.5, and for the approximately for 3 years, we are in the expansion mode. That's a very positive thing which we need to see in that number. And also one more thing in that number is the
Precisely.
job number is very good there, and that has been highlighted in that. Now coming to the
Yeah.
final question about the inflation.
Yeah.
Retail inflation number will be out on 12th of this month, and
Yeah.
one of the expectation is that because the core inflation is coming down, so we may
Yeah.
continue with the sub 5 retail inflation. Food inflation is giving some trouble. What is your expectation on the food inflation as well as the print number?
See, again, for us, when we're looking at it from a policy perspective, so there are two ways to look at this number, right? One is, of course, the market participants, how that they will behave, the bond traders, and so on and so forth. And the other side of things is the policy perspective as to where is this number going from a longer term, medium term perspective, and how the RBI can, interpret this number. My own sense is that the next few months are going to be slightly tricky. You may see a further uptick in food inflation, especially because of the kind of heat that you're seeing. There may be, it is that you're leading into that time of the year wherein there are sudden spikes in different parts of the country, especially on the food front. And I think that will lead to this number being a little volatile over the next 2 to 3 months. So a definitive trend is difficult. Core inflation would likely remain in the current, the kind of numbers that you've been seeing. I don't see an increase there because, all the other inflationary pressures apart from the food part are quite well contained. I mean, globally also and domestically. So I think that the food inflation bit is the wild card here, and you're likely to see this number maybe jump up in the coming months primarily because on the back of that.
And what's your print expectation?
We don't really come out with those expectations any longer, but I think the number should be around 5%. I don't really see, I think it was 4.83 the last month.
Yes.
And I don't really believe that it's going to go down further from there. It'll be in this region of around 5 plus minus 10, 20 basis points.
Rishi, thank you very much for talking to us.
Thanks a lot, Shishir. Have a nice day.
Yeah, have a nice day.